Today is January the 1st, January the 2nd, and this is a look at the top 5 charts that we were looking at all year long in our videos and how we could have used the Fibonaccis from the prior year or prior years to help us predict where the stock might be going in 2020 and now into 2021. So this is the S&P, and we've got a marker here for the start of 2020. We've got a marker here for the start of 2019. But the first thing you see is that all of the gaps from 2018, every one of them, were all filled, including this one, all the way down here. So all of these gaps were filled in 2019. And gaps that were created in 2019 all had pullbacks to fill the gaps. So gaps are important. We're not going to look at moving averages per se. Let's just take those out of there. We're not going to look at moving averages. We're just going to draw some Fibonaccis. So let's start with the Fibonacci of the opening of 2019 with the close of 2019. And let's apply that towards 2020. Let's do an extension. Let's do an extension. So let's start with here. And let's go down to the low point was there in the year. And look at that. If we had had our eye on this Fibonacci, we would have been able to show that the pullback, let's see, where was this here? Let's put in a 127.2. Let's do 127.2. And okay, so we moved up. We didn't hit the 127.2, might have hit a minor Fibonacci, but we came down and we crashed below the zero. We should take a look and see if that was a significant point. But let's look forward. Let's look forward first. We recovered. The 38.2 was resistance. The 61.8 was resistance. We double topped with the prior year here and we hung out there for a while. Then we moved up to 138.2 of the prior year, came back to double topping the prior year, came back to where the prior year's close was. Even missing the current year's high, we came back to the prior year's high. Once and then twice, and then we moved to finish the year at 1.618% of the prior year's Fibonacci move. Okay, that's the first study. The next study we're going to try to do is see if we could have predicted that bottom. And let's see if we can't do that here. And there we go. And does this same Fibonacci, but just drawn the other way, does it predict it? Yes, pretty much. There's a 127.2 that it went down to in one day. It surpassed that, and then it moved up. So 2 sets of Fibonaccis predicted the downward move, and then doing the inverse Fibonacci where we looked at upward move, we could have predicted the close at 161.8. Now, what does that tell us about the upcoming year? Well, let's do our Fibonaccis there. And there's a couple of ways we can do that. If we do it just the way we did in the last one, we take the close and the open. And that's going to tell us that in the future year, we have potential pullbacks to 35.54. This would be where if we started to pull back the year, this is the Fibonacci that we could look at. Don't trust for just one Fibonacci. You also have to, of course, look at this one, which is the Fibonacci that traders are going to be looking at, which is the most recent wave. But I would set 2 Fibonaccis to see where we pull back to, and one would be January to December. The other would be the most current wave for pullbacks. If we think that the market is going to go higher next year, how much higher do we think it's going to go? And we could do the same 2 Fibonacci's, but this time extensions on the prior year, which is 2020. And this shows that an upward move might take us to 39.68, 138.2. We could also put in a 127.2 there. And let's put in 127.2, and let's see where another one might be. So where did it go? 127.2, apply, okay. And it didn't show us. Where is it? Isn't that strange? Anyways, it's going to be up here somewhere. And this would where our pullbacks could be if we were using prior years. The same thing could be said here. If you take this Fibonacci, you're going to get different numbers, but the upside of this wave would be at 41.86. So if you want to predict next year, draw 2 sets of Fibonacci's, this one and this one. Clear out all the crap of the Fibonacci points you don't want. After you've drawn all of your Fibonacci's, just take a screenshot of that, save it, print it out, use it as a reference. Now let's take a look at Apple. Here's Apple. Let's get rid of our studies, our moving averages, and this is January 2020, right in here, this line right here. Didn't make it green. Let's do that to make it green. Format, let's do it green, and let's extend it. And let's take our Fibonacci's, and we do the open and the close of the year. And we're going to use that to predict the future year's pullbacks. Do that. Also do an extension in the other direction to show you where we would go on the upside. Let's get rid of this arrow here. Also take the low points, the wave. This is the wave of the prior year. Its pullbacks would be to here, to here. Look at that. This is what actually happened. We did have a pullback to 38.2. We did have a pullback to 50. We did come up and hit the previous high, and then we pulled back. So the Fibonacci's that you want to look at for next year look something like this. We're going to take a look at this Fibonacci. This will be our pullback Fibonacci. We're going to take a extension, same 2 points, and this is going to be a pullback as well as a where are we going higher kind of Fibonacci. And then of course we're going to do Fibonacci's on the main wave of the year, which still uses this point because it's the same as that point. And this is the low, which was a 127.2, good Fibonacci. And this is going to be our pullbacks. Let's do a extension here. There's our extension. And there we go. So those are 2 Fibonacci's. This one we would want to change the color on it. And I would do a yellow, apply it here. And that's that line. We'd want to color these. But anyways, there are our Fibonacci highs and our Fibonacci lows. And you look at this one, the high and low for the opening and close of the year, then the low and high of the year, and you look and see where the coincidences are. And there's a coincidence of 2 Fibonacci's. That's going to be an important point that multiple traders will be looking at. There's another one. And of course, there's another one. And of course, there's another one, and there's another one. So Fibonaccis are important. This is the way you could look at the year going forward. We could see Apple going to 164.57. You also have to put in the 127.2 here to see where the interim could be, but it should be going up to 154 based on this Fibonacci and based on this Fibonacci, even higher. So if we take this wave, it says we're going to 171. If we take this year's high and low, it says we're going to 164.57. Again, take a look at those Fibonaccis. Take a snapshot. Home Depot. This is Home Depot using the high and low of the year, the open of 2020 and this should not be saying January 2021. We've got crazy data there. Let's get rid of that and let's clear the local data. And we still have data in January of 2021. Well, sorry, we don't. I'm going cross-eyed. It ends right here, January 2021. What am I looking at? Anyways, this is the high, this is the open, and this is the close. So there's a set of Fibonaccis. But let's just take the open of the year to the high of the year where we double topped. We had a pullback to 200%. Then of course we came back to the 100%, used that as a place to test again. We tested at the 78.6, we tested at the 61.8, we came to the 38.2, 1, 2, 3, 4, 5 times, and that's where we finished off the year. So we would want to get rid of these minor ratios just to clean up our chart. But that shows you how the opening of the year and the high of the year were pretty good predictors for how the year was going to go. If we had taken that Fibonacci from the open of the year to the low, where did we end up the year? 200%. What was a key Fibonacci? 161.8. What was another one? 138.2. So when you see this kind of drop, rather than take that Fibonacci, which you could, remember the beginning of the year point. It may be, where is it? Right in here. It may be more accurate, beginning of the year to the point where it found a low and moved up. It may be more accurate for you to take that Fibonacci. Caterpillar. Caterpillar had this shark pattern that all year long I was skeptical of. Don't particularly like shark patterns, but this year we saw more shark patterns because of the pullback early in the year. Remember the pullback in the S&P, which we had up here. This S&P pullback at the beginning of the year, that naturally caused a lot of stocks to pull back. And in the case of Caterpillar, it caused a pullback to this point, which was 161.8 of the AB, and that was our third point, and that called into play the shark pattern, which had us going to 181.23, 150%, and that's exactly what happened. So let's take a look at the Fibonacci's beginning of the year and see if we can't use that as a predicting point. So we'll take the beginning of the year and the end of the year right here. Shows where pullbacks could occur, shows where moves upward can take us to as well. Remember that the shark pattern has two potential targets here, and this is an acceptable target as well. If it were to go right there, it would be completing the second shark pattern as the algorithm, the math in Motive Wave points out. So pullbacks could be to here, moves up could be to there. That's taking the beginning of the year and the end of the year. You also want to take this Fibonacci, and let's do it as an extension. The beginning of the year. Let's not do that. Let's do a retracement. Beginning of the year and the low of the year. And if we use the beginning of the year and the low of the year, we stopped at that 150%. But there it shows you that the 161.8, look where it is. Exactly where you see the shark pattern target. And then if it goes higher, it'll be 200. So these are ways to use your prior year Fibonacci's. You could take the 2018 to 2019, apply that and see how well it predicted 2019. You could take the 2019-2020 and see how well it predicted 2020. But this is how you set your targets for the upcoming year.